Hey everybody, welcome back to the channel. This is the Dividend News You Can Use series, a weekly quick hit summary of the market and dividend news so you can get the info you need and move on with your week. No fluff, just the news in about 10 minutes. So let's go. All right, so overall the market was down across the board this week with the Dow, S&P 500, and the Nasdaq all down. The Dow was down negative 1.1, S&P at negative 2.3, and the Nasdaq at negative 2.8. The week started off okay, but as the week progressed, the news came out more negative and the market reacted and kept going down. Some notable dividend stocks and funds for the week: SCHD at negative 1.94, DGRO at negative 1.82, VYM at negative 1.51, and OBL at negative 1.59, and VNQ at negative 1.98. So negative across the board when it comes to our ETFs. Some individual stocks of note: technology had a hard week. Apple down 7.07 on the results of their earnings. Qualcomm at negative 6.16%, which they had awful earnings. Microsoft following along at negative 3.13, and ASML at 5.61% in the negative. RTX, which has been in the news over the last couple of weeks, is down another 3.19%, and that comes on the back of negative 9.39% last week. So definitely a hard time for RTX. Some of the utility sector was also hit pretty hard this week. BEPC, which is Brookfield Renewable, down negative 8.43%, UGI a negative 8.47, and Nextera Energy a negative 5.05. The last sector that had a hard week this week was real estate, with O down negative 3.66, and Simon Property Group at negative 4.97. Some bright areas of the market this week for dividend investors was Caterpillar, CAT, was up 6.15 on strong earnings, and Leggett & Platt up 2.17. Overall, it was a very difficult week and a lot of red across the board for dividend investors. So let's hope next week is a better week. So overall, the sectors across the S&P 500, as I mentioned before, are mostly red. The only sectors with showing positive results for the week are communication services, consumer discretionary, and energy. The biggest losers for the week, as I mentioned earlier, are real estate, technology, and utilities, all down significantly for the week. With this downturn in the market, the investor sentiment is also going down as well. It's at 69, which is still in the greed category, but it is down from the extreme greed of 77 last week and 79 the month before. So we'll have to see how this continued earnings season, as well as the other economic news that's coming out, affects investor sentiment overall. So economic data last week, as we had mentioned, was all about employment. So here are the actual numbers that came from the results. So the job openings was 9.58 million. ADP's employment was 324, which beat the estimate of 173. So you would think that would be good, but then we had the jobless claims that matched, and the non-farm payrolls was under the estimate. So there was less jobs created. And the unemployment rate was actually 3.5, and it was expected to be 3.6, which you would think would be a good thing. But with the continued unemployment rate being so low, it might mean the Federal Reserve has to continue raising interest rates. So economic data last week, the big one that really caused the market to get spooked this week was the Fitch ratings downgrade of the U.S. government debt from AAA to AA+. Some of the reasons they gave was the expected fiscal deterioration over the next 3 years. And this is mainly because of the interest rates being so high is causing the government to have to pay a lot on their interest. One report recently said it was $1 trillion a year just in interest payments alone for the U.S. government. So that's going to make big effects on the overall economy and the spending that the government can do. They also talked about the high and growing debt burden, the erosion of governance over the past 2 decades, as well as the debt limit standoffs and last-minute resolutions that we saw earlier this year with the debt limit and also in years past. So some of the outcomes that might come of this is credit might become more expensive for the U.S. government if people don't believe that it is creditworthy, and there's less certainty in investor sentiment, which might cause stock prices to go down in response to the debt rating going down. So economic data this coming week is all about inflation. So we have the consumer price index and the producer price index later this week. So hopefully those numbers will continue to drop, but the estimate is 0.02 for July and 3.3% inflation year over year. So we'll see what those numbers come in at and how it affects the market overall. Some dividend stocks in the news. The big one this week was Icon Enterprises, ticker IEP. Their shares were down 25.5% this week and over 50% year to date. They announced that they're going to be cutting their dividend in half to $1 per share per quarter. And this comes on the back of poor earnings and a recent report by Hindenburg Research, which is a short seller, saying that it could potentially be a Ponzi scheme company. So the company did announce that they would refocus its strategy on activist investing after the short bet against the market went against them. Some notable earnings this past week. It was a little slower than the previous week, but we had Toyota, Diageo, BP, Stanley Black & Decker, Enterprise Product Partners, Ares Management Corp, Eaton Corp, and Caterpillar, as well as Merck, Braemar Hotels and Resorts, Bunge, Fortis, Anheuser-Busch, Nintendo, LyondellBasell Industries, and TELUS. So you can see the estimate as well as the actual. You can take a second and pause the screen if you want to look. The upcoming week, we have on Monday, Tyson Foods, Viatris, UPS, Eli Lilly, Easterly Government Properties, Novo Nordisk, Siemens, and Six Flags. The overall S&P 500 has reported 84% of the companies have reported so far. So earnings season is coming to an end. 79% of those companies have reported a positive EPS surprise, and 65% of them have reported a positive revenue surprise. So overall, it's been a very good earnings season, but we'll see how the next week or two wraps things up. We had quite a lot of dividend increases this week, so it's always a fun time as a dividend investor when you get your increases. We have TELUS, Illinois Toolworks, RLJ Lodging, BCE, Dover, Microchip Technology, Main Street Capital, Iron Mountain, Federal Realty Investment Trust, Simon Property Group, American States Water, Wingstop, BP, Enbridge, and Papa John's all announcing dividend increases this week. So congratulations to all the shareholders of these companies. And some upcoming ex-dividend dates for this week, as you probably know, and I've mentioned before, you do have to own the company before the date here in order to get this quarterly dividend. On Monday, we have MetLife, Las Vegas Sands, Invitation Homes, and Main Street Capital. On Tuesday, we have Clorox. Wednesday is American Electric Power, Paychex, Nexstar Media, PPG Industries, Pool Corp, IBM, Sunoco, and TJX companies. On Thursday, we have Honeywell, Starbucks, Charles Schwab, Emerson Electric, MSCI, Walmart, Truist Financial, Visa, and BP. And rounding off on Friday, we have Papa John's, PetMed Express, Bloomin' Brands, Apple, WW Grainger, and UPS. Okay, undervalued stock of the week is BlackRock, which is actually my #1 favorite company. Their current yield is 2.82%, but their 5-year historical average is only 2.51. Based on that calculation, it appears to be about 12.35% undervalued at this time. And the current price is $710.28, and the analyst's 1-year estimate is $807.54. So given that, it looks like there's about a 13.69% upside to BlackRock. So if you're interested in this global investment management company, this might be a good time to look into buying more shares, or at least put it on your watch list. So my personal buy plan for the week, I'm going to be investing in 4 ETFs and closed-end funds this week, including JEPI, Devo, UTG, and BDJ. As I've mentioned before and in a previous video, I do have a set investment plan for the year, and so this is the investments that are coming up for this week for me. So thank you very much for watching again. Hopefully you enjoyed this session. Please click subscribe if you haven't already, and please hit the like button if you liked what you saw here. And definitely take a look at the next video that's being recommended here. I look forward to talking to you on our next video. Thanks.